But let's try and understand the global construct as well and where India lies amidst that. We've got Santosh Rao joining in on the show right now. Santosh, hi, good morning. The big talking point
Morning.
has been the China Finance Ministry weekend briefing, where there is a hint of some more stimulus rounds coming in. But what's in it, you think, for China watchers? What can be expected?
Yeah, I think the last time they did not come through with good detail on there was no follow-up to what they said initially. So I think that was very disappointing. See, China, I think whatever they do is really going to be uh, it's not going to be looked at very. I mean, people are going to be skeptical because they have other issues. They have some long-term fundamental issues, whether it's demographic, whether it's the real estate issues, the consumer is weak. There's so many other things going on structurally. They can input and boost and give a short-term boost to things. So it's going to take a while for it to settle. So it's not going to just happen. So they need to come out with more detail as to what they plan to do, where they plan to do, and how long they plan to do, and so things like that. So I think it's a trading call essentially. People are just getting in, but on a fundamental basis, the long-term investors are not really going in with both feet because at this point there are too many questions that need to be answered rather than it's not resolved yet. There's no clear-cut answer yet.
In isolation, India is perhaps the best story. But
Yeah.
despite that, whether it is China or whether it is Fed, the flows from emerging market specialist into India or global flows via ETF route into India have not been very rich. Why is that? If China is not great, if Europe is a sick man of the world, if none of the periphery markets are doing well, and if there is so much of liquidity, why it is not moving into why the liquidity is not coming to India?
Yeah. One thing that goes with the India narrative is that it's too expensive at this point. It's run up quite a bit. It is expensive. It needs to take a pause. So I think people are probably taking their profits and they're probably not putting in new money in there at this point. They want things to settle down more. And then US has good investment again. If interest rates come down, I think stock market is going to rally here. I think people they're going to keep their investments here, and if rates come down, the real estate market is going to pick up again. So a lot of good things happening here if the Fed stays on the rate cutting path. So that's again is not an unknown yet. But at this point, I think a smart investor is better off just waiting and just wait it out and just wait for the dust to settle. Let the elections happen. Let the next Fed meeting happen. Let's see if they're going to cut more or stay. That's it for the rest of the year. So that's again debatable. Are there going to be any cuts at all? Because the data is amazingly good in every aspect. So the wages are growing, inflation adjusted wages are growing, layoffs are low. I think the GDP is expected to be close to 2.8 to 3% in the fourth quarter. So that is I think these are good numbers. So I think US is the place to be, and India and other places they have run up quite a bit. So I think that they're taking a pause at this point, and no new money is flowing in. In fact, money is coming out, which makes total sense.
And any assessment, Santosh, as to what the movement and volatility that we're seeing in crude oil prices could spell out for our own economy?
Yeah, so I think that crude oil has been quite the story has not been very obvious. We have all these conflicts going on, but that price is really I think the biggest boost or biggest disruption is going to happen if maybe Israel attacks Iran's energy facility, I mean the nuclear facilities and other energy assets. I think that'll cause the oil to price. But other than that, the supply is more than enough to meet the demand. So there's no that supply demand imbalance. Things are flowing easily. Iran is exporting. Russia is doing exporting. In fact, there are record levels of exporting of oil going on. So there's no disruption of sorts. So at this point, the geopolitical events, the wars seem to be localized. They haven't spread out too much, and that's not really causing any alarm. But if the war escalates, Israel really goes after Iran, and then that heats up, I think that could cause the oil price to go up to 90, according to one estimate from one of the analysts. But other than that, it's the 70 to 80 range bound oil. I think that's what we're looking at. So let's hope that it doesn't escalate.
Just crossed on that one because that's definitely going to have a bearing on India as well. But Santosh, so good chatting with you today. Thanks for taking
Thank
the
you.
time.
Take care. Thanks.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.